Are you feeling the pain of what a lot of Americans are going through right now with higher expenses, higher costs, and maybe you just don't have enough money to cover all of those expenses each month? It could be you're unemployed, or maybe you're underemployed, or possibly maybe you just need to save a little bit more money. Today, we are talking about how you can reduce your monthly mortgage payment. My name is Tabitha Richardson, and welcome to Real Estate and Wealth Podcast. Today's topic is something that a lot of us, whether you may be feeling the pinch these days in your budget, or maybe you just need to save a little bit more money and you're trying to figure out ways that you can do that. One way is to reduce expenses, but I'm going to tell you another way of how to reduce your mortgage payment. So let's talk about first what a monthly mortgage payment is made of. It's made of principal, interest, taxes, and insurance. And the acronym for that is PITI. So, first, let's talk about the P, which is the principal. Now, your principal is basically if you take the amount of the purchase price that you purchased the house minus any down payment monies that you put in, and you divide that over the time of your loan, whether if it's 15 years, 20 years, 30 years, or if you have a 40-year loan. That is the principal. It's the principal balance. The more you pay down the principal, the quicker you'll pay off your mortgage. And then we have the interest, which is based on your interest rate that you got at the time that you purchased the house. So some people have like 2%, 3%, and then some people have higher in the 8% or possibly more, depending on how long you owned your house. Then we have the T, which is the taxes, and that is your property taxes. That's usually charged by your state or your county. And last, we have the last I, which is the insurance, which is your homeowner's insurance. All of that together make up your one monthly payment. So let's talk about it, and wait for the last one because that's one that I did that some people don't even really think about. So first, let's talk about the one that's actually the hardest, which is the interest. Your interest, in order for you to change that, you'll need to refinance out of the loan. Now, if you, and this is probably the most popular way that people think of if they want to reduce their payment, is to refinance out of their current loan and go into another loan. Usually, if you have a higher interest rate and the interest rates drop, then you'll refinance out of the higher interest rate, go into a lower interest rate, and it will drop your payment. That is a harder way because you have to actually redo your loan. And if you have a low interest rate, so if you bought a few years back and you may have 3% or lower, well, right now the interest rates are a lot higher, like 7%. So if you refinance, it's actually going to have the adverse effect of what you're trying to do. It will make your payment go up unless you're putting down a whole lot of money, but still that's not the best thing to do. So the interest portion is kind of out unless you have a higher mortgage, interest rates drop. That's a way that you can reduce your monthly mortgage payment. The next way it's your taxes. So your property taxes. Now, when you first bought your home, you should have gotten a letter to apply for a homestead tax credit. If you did that, then there's not much more that you can do at this point unless you are a 100% disabled veteran. Then you can potentially get your taxes totally removed and you don't have to pay that. So if you did not know that, that is something that you can actually do to reduce your monthly mortgage payment if you are a 100% disabled veteran. Reach out to your local property tax department and see what the process is for you to have your property taxes removed. But if you did not apply for the homestead tax credit, and here in Maryland, you can actually go, and I'll put the link in the description, but you can go and check to see if you applied or not. If you did not, you can apply for the homestead tax credit and potentially lower your tax liability. And then we have the insurance, so your homeowner's insurance. Now, when you first purchased your home, In order to close, you had to get homeowners insurance. Now, you may have gone with a referral, a recommendation from your lender, possibly your realtor, or someone else, or maybe just the company that you had that you went with was good at the time. Now, over time, they may have raised their rates. You can shop your homeowner's insurance. And recently, I actually did this. I switched from the company that I was with for over 20 years because the original sales rep that I was with, who owned that location, he retired. Like, how can you retire on me? And they automatically sent my account to another account representative in another location. That was like the worst customer service. They raised my rates multiple times, and I just wasn't feeling it. So I decided to look for another company, and I did. And I moved the services over. Now, I wouldn't say that I saved a lot of money. It wasn't a lot of money that I saved, but I was also disappointed and dissatisfied with the services that I was receiving at the other company. Well, I went with that company for about a year, and they raised my rates two times in that time frame, and it was just ridiculous. I had my car insurance, umbrella policy, as well as the homeowner's insurance and some other policies with them. Well, I had enough, and I decided to go back to the original company that I was with, but I looked for a local representative to where I live now. I found someone, we went through everything, and they're saving me a few $100s a month on some of the policies, and on the homeowners insurance I think it's about $500 to $600 for the year. So that's something that you can do. You can shop around for a lower rate. You don't have to take all of your policies to another company, but if you do have multiple policies with an insurance company, you do get that multi-line discount. What you'll do is you'll get that policy in place first, and then you'll cancel the old policy and then contact your mortgage company and let them know that you have made that change so that you can see the adjustment in your monthly mortgage payment. Okay. And then the last one is what I did just recently. Now, this is only going to apply to a select few people, depending on what type of mortgage that you have. And I'll explain why. Now, if you have an FHA loan, now it depends on how long you've had your FHA loan because this changed a few years back. But for your private mortgage insurance, a long time ago, private mortgage insurance would drop off of your mortgage, but they changed that after the Great Recession. And now, when you have an FHA loan, the private mortgage insurance stays on the mortgage for the life of the loan or until you refinance out of it or pay off, sell the house, or whatever. So you cannot get that taken off if you have an FHA loan or a VA loan. But if you have a conventional loan, you can have it taken off. Now, when you go to closing, if you remember when you close, the title rep probably showed you like a piece of paper that had all of the payments for the whole 30 years or however long your term was. And they should have told you after a certain amount of time that your payment was going to go lower because your PMI, private mortgage insurance, will automatically drop off once you hit 20% equity in your property. So depending on how much you put down. So for your conventional loan, if you put down 5%, that means that you needed another 15% before that payment would drop off. Well, our payment was scheduled to drop off in 2029, which is 4 years from now. If you put down 10%, then you have a shorter distance. If you put down 20% when you purchase your house, then you did not have to get PMI insurance. You only have to get PMI insurance if you put down less than 20%. Well, what you can do, and especially right now when property values have just been escalating over the years, and depending on when you bought your house, if your home value is it went up. I'm just going to use some easy numbers for an example for you. So if your house, let's say you owe 750,000, right? When you bought the house, you bought it for whatever, and now how much you owe when you pull up your mortgage statement, your balance 750,000, right? But what's amazing about the property values going up is that now that house is worth $1 million. Well, 20% of that $1 million would be 800,000. You owe less than what 20% would be. You can reach out to your mortgage company and let them know that you want to remove the PMI off of your payment because you own 20% of the property. Now, we are with Chase Bank. So I had to pay $150 to do a BPO. And a BPO is just a broker price opinion where they'll get a real estate professional to go out to your house. It's like an appraisal, but it's not done by an appraiser. It's done by a real estate professional. So they'll get a random real estate professional to go out and do a market analysis on your home and to determine the value. And if that value does fall within the right guidelines, then they will remove it off. This only took a couple of weeks for us to do. Paid the 150, they sent someone out. They did ask about any updates, upgrades that we made on the home from the time that we bought it until now, and we gave them a list of all of those upgrades that we made. And then once they did the BPO, it was removed. So that saved us a few $100s as well on our monthly mortgage payment. Now, it would have eventually come off, but we were able to get it off much sooner. And especially right now when the property values are still high. I don't know what might happen next year. Hopefully, we don't see any kind of adverse effects in the real estate industry and property values start sinking. I am not wishing that on the market, but you just never know what can happen. So we want to take advantage of the market that we're in now. And if we can get that PMI taken off now, why not? So that's it. You have a few things that you can use to try to lower your monthly mortgage payment, and hopefully that will save you some money. And if it does, please come back. Let me know which one of these methods you used and share any knowledge that you have for other people. And if you like this episode, please make sure that you like it, comment below, and hit that notification so you know when I post any new videos. Look forward to seeing you guys on the next episode.